running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
You want an investment edge, but all you hear is noise, hype, and half-truths. Every signal is solid information, but only if you can see the bigger picture. This is where the Quasar magic happens. Weather, charts, news, all financial signals funneled into a single dashboard. Data alone isn't enough. Quasar Markets turns it into energy, sharp, clear, precise. Optimize with Quasar Markets today. Your edge when investing.
Good morning, Quasar Markets Live, and happy Halloween, everyone. Hondo here, flying solo today as Steve is probably out trick-or-treating for yield somewhere. I will have Mr. Flanagan in a little bit, so we got one of the Steves, just not both of them today. Markets are trying to erase Thursday's Spook Fest. The Qs and SPY both pointing higher in pre-market trading, and it's all thanks to two familiar heavyweights, Apple and Amazon, right? Now, we're still dealing with that lovely government shutdown, day 29 and counting, so traders are clinging to earnings like a lifeline, and what a day for them. Big Tech just dropped a full-size candy bar bag on Wall Street. Amazon, Apple, NVIDIA, I mean, the Mag 7 just exploding today in general. We do see, as we talked about, let's start with the negative government shutdown, day 29. One thing I do want to warn about, there are some banks out there. I saw Capital One, Bank of America, and others that are offering, folks that work for the government leniency on some of your payments. Just make sure you are reading the fine print, okay? Because some forbearance deals can bite harder if the repayment terms balloon later, so something to keep in mind. Chase, Bank of America, Wells Fargo, and Citi are all rolling out relief, so we do like that. But again, here at Quasar, we try to keep you on both sides and warn of balloon payments that can come and also how it can affect your credit. We have 1.4 million federal workers that will be unpaid. So, definitely terrible. President has talked about using what he calls the Trump card, which is going to where it just needs a majority to make it pass. Doesn't need the quorum that we currently have. There'll be fights back and forth. We'll see how it plays out. I don't have an actual bet on that side because I could see Republicans saying, you know what, if the way the president worded it yesterday was, listen, or this morning, that the Democrats are going to take advantage of it and do it when they take back office anyways. So we should do it first. And I think you'll see others join into that boat. So we'll see how it goes. We just need the government to reopen. This is foolishness from both sides. So hopefully we get that. That's what we're really looking for in general. Looking again at just the general stuff here, tick is pretty flat here. Advanced decline up about 1,300. So nice little move to the upside so far. A lot of the pre-market movers are to the upside. As I mentioned in the open, the S&P is up about 80 basis points here and set to open at another, just below the all-time high. NASDAQ up 1.32% and also set to open just below all-time highs. Gold nicely does seem to be using 4,000 as support. Does that become the new floor for gold? We'll have to ask Peter Thomas that and get his input there. Silver nicely up back above 49 here. And copper, our CPER that I use to track copper, up about 44 basis points this morning. We had a nice move up by crypto. late yesterday. It's been sold off, a decent amount of it already. Got as high as 110,600, back below 110 here at 109,744. Ethereum at 38.42. Story there is still all about the derivative volume versus the spot volume. If you look at Bitcoin yesterday, 122 billion in futures volume, only 7.81 billion in spot volume. We need to see that. And when you look at some of the others, they're just as bad. Ethereum was $100 billion in futures, $5 billion in spot. In healthy times, they're usually about a third. So we'd be looking for something. If there's 100 billion in futures volume, are we seeing 25 to 30 billion in spot volume? That is what the healthy market looks like. So still be wary there. Let's get into earnings. Tech titans are definitely leading the way here. Apple bites back here, 10 to 12% growth outlook sends the stock up. Apple slightly above 2% now, up about 63 basis points. So almost a 3% gain since their earnings yesterday. They had a Q4 revenue of $102.5 billion, up 8% year over year. So BigBeat's listening again. This is not against a lowered, number. Your revenue's up 8%. That's a big number, especially on $100 billion, target. EPS $1.85 versus estimates at $1.78. Their iPhone revenue did miss, believe it or not, $49 billion. It missed slightly, but their services were up 15% to a record $28.8 billion. Their holiday quarter guidance plus 10 to 12%. So again, up 8% year over year. This quarter, they're looking to be up 10 to 12% in total revenue. The street only expected 6%. So a huge beat there. Their AI spend, their research and development going to $18.58 billion. Tim Cook did say strong iPhone demand limited by the supply. I did notice that. Channel check. Took the wife to get a new iPhone this week, and we had to wait to get the color she wanted. They did have iPhones, but not in all the sizes, not in all the colors. So strong move for Apple. Their quarter, if we keep everything in the Halloween mood today, I think I'm going to do. Apple's quarter was basically a caramel apple, sweet core, but with a few sticky spots on the outside. They missed a touch on iPhone sales, mostly due to China, but the guidance for Q1 blew expectations out of the water. Services were the star again, something that we look for, that Steve talks about a lot. Services are sticky. They're good. They're repeatable. They're revenue, right? Recurring revenue. Hitting record highs, and Apple quietly ramping up AI spending while keeping that classic Cook calm. Tim Cook said demand for the iPhone 17 is so strong they still can't meet all orders. Talk about a good problem to have. Wall Street loves it. Apple up over 2% and helping to carry the NASDAQ higher, as we said. They're looking to open at 277, a new all-time high there by about $3. So nice move to the upside, nice beat. From a chart perspective, if we really get flying today, you could see them come and retest, definitely that 284 high it hit on the news last night. That'd be the level. If we break through 285, watch out above. So again, 285 would be a key number to watch. That's how high it got to yesterday before pulling back. Next, you talk about it. How about Amazon? The AWS resurrection is back in place. Saw Andrew Jaffe is going to be on CNBC here coming up soon. They had an EPS of $1.95 versus $1.57 estimate. Came in at $180 billion in revenue. Again, a beat of about $2 billion. And here's where it matters. AWS growth, web services, right? That's what everyone wants to hear about. 20% plus year over year, fastest in 11 quarters. Ad business plus 24% and accelerated. Their capex is now 125 billion for 2025, up from the previously stated 100 billion. And their quarter four guidance, again, 10 to 13% up year over year, 206 to 213 billion. So you can say what you want about the economy, but these top heavy stocks, these tech heavy stocks, the Mag 7, they're delivering, and they're delivering not just, beats, but significant enough beats that they do warrant their valuations in my mind. So we'll have Steve back on Monday. I'm sure him and I will be arguing that at length. Amazon stock is on track for its best day since 2022, up over 13% pre-market after AWS roared back to life. And I'm not saying to chase it here. That's like a zombie cloud business subtly going CrossFit. Again, Andrew Jassy said demand for AI infrastructure is off the charts. Amazon basically buying every NVIDIA GPU in sight. Evercore called it an AWS unlock, and Wedbush says the AI narrative has flipped positive. The bottom line is that Amazon's no longer the laggard in the Mag 7. They're back in the fast lane, and the market is rewarding it. So all about Amazon. 13.8% to the upside, 253.60, well above its all-time high. It doesn't even show up in my daily chart unless I do that. So huge move, blow off to the upside here. This one's very close to the highs that we saw earlier last night. I know Steve at 13%, now a $2.38 trillion company. Steve usually likes to look at a short-term scalp on these, but as an investor, I would tell you I would not be fading this right now. I would not be chasing it either. As a trader, I would be probably looking here to see what it does on the open, and we will if there is a scalp to the downside opportunity there for it. Netflix. Next one on deck did not have earnings yesterday. They had the negative earnings last week, but they did have some pretty good news. They're up about 1.5% here. They were up slightly or more earlier. They are going to do a 10-for-1 stock split. So again, that doesn't change anything. It just means, investors that look at it will buy a share of Netflix at $109 and not have to buy a splice of it if they are using something like Robinhood that allows that, or have to go full in on $1,000 share of Netflix. So that does have them up. The split will be effective November 17th. They did also announce they are exploring a bid for Warner Brothers Discovery, the HBO, DC Comics, Harry Potter IP. And they did announce a little bit of their revenue, 11.5 billion, and gave a full year outlook of 45.1 billion. They clearly want to make the stock more binge worthy, announcing the 10-for-1 split that will bring shares more accessible to employees, is what they talked about. They said employees aren't able to take advantage of their stock options because they are too much. And then again, they've talked about the fact that they would take a look at and are considering a bid for Warner Brothers. So pretty big news there. Also, we are 15 minutes from the open. Tick is slightly positive. Advanced decline hasn't moved much since we've been on here. In fact, since about 9 a.m. Yeah, since we've been on. It's been pretty flat. DXY back above 99. In fact, looking and threatening to maybe break back up above 100 here. So we'll have Mr. Flanagan on soon to give us all of the data on that. And so far, Q's looking to open up about 1.33% to the upside. SPY about 81 basis points to the upside. I will mention, though, that since about 8:30, we really have been sliding down. We saw most of our morning highs hit at 8:30. Again, gold 40.31, silver above 49. We are going to get in and talk a little bit about oil. In fact, we can move to that next. Let's hit the other side of the positive earnings. Let's talk a little bit about the bottom side. And we got to see crude here has been feeling a little cruddish. And if we take a look at ExxonMobil, XOM, they did have earnings and they did have an earnings beat, but didn't have the answer that the public wants to hear. Between yesterday and today, down about 2%. They did have an EPS that beat estimates. They came in at $1.88 versus estimates of $1.82. They did miss revenue slightly. They came in at 85 billion. Estimations were at 87.7 billion. And their net income was down 12% year over year. So again, this is a miss. The only real beat was on their adjusted EPS. They talked about their production. It is a new record, 4.77 million barrels a day. Permian Basin set a new record at 1.7 million barrels per day, and the Guyana 700,000 barrels per day. They do expect to return about $9.4 billion in shareholder returns this quarter, and their CapEx at $21 billion year to date is a little bit lower than the guidance they had given previously at 27 to 29 billion range. And they did raise their dividend $1.03 to $1.03 a share. Why are they down? The reason is OPEC Plus. It keeps cranking out barrels while President Trump's tariffs weigh on the outlook. Their CEO, Darren Woods, tried to spin it with a smile, saying this was Exxon's best comparable quarter ever for EPS when oil prices were falling. The Guyana and Permian operations both hit new production records. That's 700,000 barrels a day offshore in South America and nearly 1.7 million here at home. As I said, they returned $9.4 billion to shareholders and raised their dividends again. But Wall Street's focused on that top line miss. So the stock, again, down about 2% since yesterday. And I did hear Exxon and Chevron folks speaking there. So, and one of the things that they spoke about was the fact that they make decisions to turn on and off their wells based upon those prices. So even though they're not part of OPEC, the OPEC decision does tremendously affect them. So, energy earnings were missed, like I said. And then if we go into Chevron next, they fared a little bit better. And Chevron CVX here. Chevron beat on both earnings and revenue. Their EPS came in at $1.85 adjusted, expected to be $1.71. Revenue at $49.7 billion, about a $700 million beat. But their net income again down about 21% year over year. So the price of oil is hurting both of these. They had record output also, 4.1 million barrels a day. They did say they got a boost from their Hess acquisition, plus their Gulf of Mexico offshore business and their Kazakhstan gains. Refinery profits are up 300% year over year. So that is the benefit. If you've been listening here, Steve and I have talked about the problem with gas and oil is not needing to drill, baby, drill. It's needing to refine, baby, refine, in that we don't have enough refiners here in the U.S. So good to see them, reaping the profits there and hopefully putting their CapEx into that. Free cash flow is up 50% year over year, so they do have money to spend, and their CapEx will be $4.4 billion this quarter, up 7% year over year. Part of that is due to the Hess assets they're still acquiring. So, again, for them, they did have record production of over 4 million barrels a day, boosted by the Hess acquisition. Downstream side was a surprise. U.S. refining profits tripled as margins widened, helping offset the weaker crude pricing. So that shows you where this is what we've talked about, the difference between what, crude costs and what gasoline costs. These refineries are where they're making that margin back up, it looks like, especially in the case of Chevron. And you do need to, if you're going to get there, macro headwinds are the real villain in the story. OPEC Plus keeps increasing output. U.S. crude's down 16% on the year, and Trump's tariffs are spooking demand forecast. You could say that the energy sector is caught between a rock and a hard barrel. Even though production setting records, price per barrels has been stuck in the mid 70s, and that's squeezing margins across the board. The big picture, Chevron shows that scale still wins. Exxon shows efficiencies can only carry you so far. And the sector overall is playing defense against policy and price pressures, with oil under 75 and global production ramping. Traders are watching for signs of supply cuts or any geopolitical flare-ups that could lift prices again. For now, energy is like that reliable old pickup truck, still running strong, but maybe not racing ahead of the EVs and AI engines on this rally. And again, the big part is they do have strong revenue streams that are concurrent, right? For all the talk of electric not coming that soon. Okay, here, I'm going to take 30 seconds as we put in a little commercial here to have a sip of water, and we'll be right back to finish us up and get us into the open.
You want an investment edge, but all you hear is noise, hype, and half-truths. Every signal is solid information, but only if you can see the bigger picture. This is where the Quasar magic happens. Weather, charts, news, all financial signals funneled into a single dashboard. Data alone isn't enough. Quasar Markets turns it into energy, sharp, clear, precise. Optimize with Quasar Markets today. Your edge when investing.
You're running full speed, but the markets are faster. Quasar Markets Live brings the world's top financial minds to you. Everything you need to know in one place. Learn from elite educators and gain a competitive edge, leveling the playing field for you. Join the conversation. Quasar Markets Live.
Okay, we're back, and guess what else is back? NVIDIA in the news. Up about 2% here today. NVIDIA's Jensen Huang just landed in South Korea and dropped more deals than a Black Friday ad. Samsung was building a mega factory that will use over 50,000 NVIDIA GPUs. And Amazon's cloud CapEx, a big slice of that pie, goes straight to NVIDIA's hardware. So even on a day when NVIDIA didn't report earnings, the stock's getting an AI sugar rush, up 2% ahead of the bell here. And looks like it wants to run back up towards its all-time high at 212. So again, NVIDIA right now back a little bit below that 4.93 trillion. Doesn't like to spend much time there. It definitely would like to get a move back to the upside. Kicking in on the tech side, still Western Digital. They're having a monster year, up over 200% year to date, and today's earnings show why. Profit and revenue both crushed it, and the CEO, Irving Tan, said demand from cloud and AI clients is locked in for years. So think about that. They've already got hyperscaler orders through 2027. You could call it a solid state success story. And again, I'm just going to point out that, the economy versus the market, it is a K-shaped economy for sure. And the folks that are winning are winning. And we're seeing it on these MAG stocks, right? The MAG 7s are the ones that are leading us to the upside today in a big way. Western Digital, chip manufacturers also. Their EPS came in at $1.78 versus $1.59. As I said, revenue up 27%, $2.82 billion. and their gross margin moved up from 37.3 to 43.9%. And again, they have hyperscaler orders locked in through 2027. So Western Digital pumping to the upside. And in my opinion, again, one that doesn't look like it wants to stop. And you can see here, this one is well above its high, all-time high, and above the highs we saw last night. So will be definitely interesting to keep an eye on. Western Digital could be a pumper here this morning. We are 2 minutes away from the open. Let's get one more in before then, or two more in there. Let's go to my realm of the world, crypto. We do see Coinbase up around 2.73%, although I will point out only regaining about half of yesterday's losses. Crypto stocks are starting to get into the action. Amazon smashed its revenue estimates as trading volume picked up with Bitcoin's rebound. And I will mention again, the other part of this that I talked about earlier is you can now trade those perpetual futures that are doing $100 billion a day in trading volume on Coinbase. So that is definitely helping them right there. Their revenue was $1.9 billion, up 55% year over year, and their transactional revenue was up 37%. Again, it's not spot volume where I need it to be to see the prices really move to the upside. It is more speculation and trading of futures, but any way you look at it, it is strong for Coinbase. Most of you know I am a fan, and I do, in full disclosure, hold some Coinbase in my portfolio. Another crypto stock that is moving well to the upside is MicroStrategy, up about 6% here. They printed big profits and added more Bitcoin, sitting now at over 640,000 coins. Those that know me know that I am not a fan that they have that many coins. I don't like that much centralization. I would like every company in the S&P 500 to have a small holding of Bitcoin, more so than one company be completely designed around its Bitcoin holdings. And MicroStrategy, they had profits of $8.42 a share, and again, holding up about 640,000. Market is open. MicroStrategy seeing a sell-off here on the open. Tick is slightly to the downside. Advanced decline completely flat. Moved to 12 here. Now negative 35. So we are seeing some profit taken here. Let's take a look at Amazon first. And like I said, wow, yeah, Steve would have been short in that, in my opinion. Up 13%, now only up 11. So 2% move to the downside here. That one was pretty simple to see. As Steve would say, that was a little bit overextended. There was some profit taking there. Not a surprise at all. Apple, same thing, down about a 0.5 percentage point, some profit taking there. Not a surprise. NVIDIA, we're seeing a profit taking there. So across the board, most of them moving to the downside. Netflix holding up a little bit better. Tesla actually moved to the upside on the open. Meta to the downside. Also, Google fairly unchanged there. If we look at the bigger picture from the NASDAQ, the QQQ is moving to the downside, but still up 1.18%. Gold looks like it wants to challenge to the downside, that 4,000 level here. So that is our floor to watch. Bitcoin 109,652. Again, I am fading rips, not necessarily buying the dip as much. So that's what we're looking at. And a fall through VWAP here could send you down towards that 106 and change level. Amazon getting a nice little pop back up here. So now after that little bit of a sell off, still up 12% here, moving to the upside. Let's take a look at the early morning flyers. Bright House Financial up about 21% here today. They don't have earnings, so I'm not sure. It says it looks like they're being bought out. So that would be why. Never mind. We talked about Amazon. We talked about Western Digital up 10%, but moving to the downside, some profit taking there. Again, not surprising to see profit taking. We always suggest it here. Alignment Healthcare, ALHC, up about 8.27% on their quarterly earnings that came out late yesterday. They had a beat, went positive on their earnings per share, was expected to be a negative, and came in at almost $1 billion in net revenue. So nice little move there by them. Astera Labs is up about 8.32%. They go into earnings next week. Marvell also mentioned in a lot of the as a winner in the chip area. They are up nicely here, up 4.94%. And we do see First Solar up really nicely here, up about 10.66%. This was after an earnings miss by them yesterday. So they did hit revenue targets, but missed their EPS. Nice move to the upside there. Again, Amazon still moving to the downside. Like I said, that was the one that looked like the easy short to look at here this morning. Let me take a quick look and see what I do have going across my stuff here. Not a huge move across anything here. Yeah, not a ton there. Okay, let's continue through here. Let's take a look and see Amazon continue. Wow, moved to the downside 247.40 here. So this is down about $5, almost $6 from the highs we saw. Amazon moving to the downside. Same thing with Apple. So there is definitely a move to the downside here. They are selling off. The algos are selling off so far this morning. I do have a lot more from the morning or the earnings reports to get to here for you too also. So we will do that. Look at Apple still breaking to the downside here. A break right here. You're looking really at 265 as its next sort of level as support. I'd say more 267. So Apple here, if it falls, you got 267 to the downside. Same thing. Amazon holding up right at its 50 MA on the hourly chart, but if it does break below, you're starting to see what I call the Bart Simpson here. Big move to the upside. Raggedy head usually brings a fall right back down to what I call the ears. So wouldn't be surprised here to see a little bit of a give back by Amazon here. I do think pullbacks are probably dip buying opportunities here if we get a decent drop on some of these. Let's take a look and see what the financials yesterday were, the winners. So looking to see what they're doing here today. They are fairly much holding up, a lot of them slightly in the red. Bank of America down 15 basis points. Wells Fargo is still dropping. Morgan Stanley dropping. Goldman Sachs down a little bit. Looking at the chip sector, NVIDIA up 2.25%. So again, moving to the upside. What matters is those chip sales, right? We just talked about them and Western Digital. If you've got orders all the way through 2027 that you can't fill, that's a good place to be. You don't have much, that takes a lot of pressure off the sales force, doesn't it? Broadband down about 38 basis points. TSM up 1. The other big winner so far had been Marvell. Where did it move to? Up about 6%. It is still the big winner in the chip side. Also, on laggard so far, we do now see, wow, this is an interesting one. Oh, I'm looking at the wrong spot. Never mind. Here they are. SPS Commerce on their earnings report was down about 24%, but it is bouncing off of those lows. TBBK, the Bank Corp Inc., down about 13.64% on their earnings miss. They missed, I believe, on both. Oh, right. They missed on both sides here. They missed top line revenue by about $30 million, expected to come in at 162, came in at 134, and they had a slight miss on their EPS of about 11.28%. So they are down about 13%. Charter Communications and Comcast were both laggards today. Also, Charter Communications down about 5.57%. And Comcast down about 1.9. So the legacy cable company is not doing very well so far. Roku up on their earnings here very nicely. They were an early morning laggard. Now absolutely taken off, just at an all-time high. Roku did, and on their earnings they hit basically exactly their revenue estimate, and they did have a beat on their earnings and revenue. I just heard Apple is now down 57 basis points, so go figure out this market if you can. Microsoft down about 28 basis points, and we do see negativity still coming across on the tick, down about 177. Qs are up 1.1%, but you can see that it is right about at lows of the day. Same thing with the SPY, up 64 basis points, but that is really at the lows of the day or close to them. Bitcoin 109,724. So after making a move up above 110, actually as high as 110,600 or so, pulling back here. We do see ASTS, nice little move to the upside, about 3% here. Alibaba down about 2% here, so a little bit of a move to the downside here on Alibaba. It had a nice move up last week, not so much this week. Coinbase, as we talked about, up about 4.07%, breaking back to the upside here. Looks like it might want to run. That's a good looking move here by Coinbase. So Coinbase making a move to the upside. If you can get across that 343.80 area, you've got a nice move here that you could look for all the way up towards that 360 area. So this could be a nice little area here for Coinbase on their earnings. Costco, I keep keeping an eye on, keeping down around 912 here. I am very close to where I want to start to maybe nibble on Costco here. Personally, I think they will be a winner in the holiday season, because they attract both the high-end consumer and the low-end consumer. And I've seen how busy the one is in my area. So I am definitely interested here. I don't want to get too tight here, because last time I was waiting for 900, it got to 902 and I missed it. This time I will be starting to look here more at that 910 level, if it's, that looks to me to be a good area here. So definitely interested in Costco for a little swing trade personally. You see CrowdStrike, nice move to the upside, also trying to break towards its all-time high, up about 1.28% here today. Robinhood up 6.24% here today. That is definitely in sympathy play to Coinbase, I'm going to guess. My one takeaway there would be Robinhood doesn't have the futures yet. They will. That will be a boost to them in the futures. Just broke through nicely. Nice breakout here. If they can get across this 148.95 area, they've got room to run. So you've got room for runners here. Do see crypto mining stocks having a good day also. Hut up about 5% here this morning. Bitminer up about 4% here this morning also. Bitcoin holding up right at VWAP. Not really strong, but not falling apart yet. I do see he's coming into the room here to give me a hand a little early this morning and talk about everything going on. Let's bring him in, Mr. Flanagan. How are you doing today?
Doing great, Howard. How are you? Happy Friday to the team out there. And dollar index, woo, we've gone. We've broken up. We're 99.70-ish. We talked about the levels of breaking. But I want to
99.80. 99.80 here.
All right, and that's on the euro dollar dropping off here. Euro dollar now broken through that support. I was going to highlight the euro dollar. We had a low so far today, which is now broken, of 47. Now that matches the low of 115.42, set twice on October 14th and then October 9th. That's now caved in. So now we're setting a nice objective in the low levels of 115. What's behind the euro dollar move, which is the over 50% of the dollar index? Well, you've got inflation in Europe. Europe announced what they call the HICP, and that was at 2.1%. So they're right on their inflation target of 2%. They passed on lowering interest rates this week. Did not move. They're keeping their interest rates, the ECB, at 2%. But let's look at what's gone on. German Q3 GDP, 0%. On the year, Germany is growing at 0.3. Italy, Q3 GDP, 0%. And the overall European Union, the Eurozone GDP for the Q3, 0.2%. Now, on the year, that's a 1.3%, but that's down from its previous quarter of 1.5% on the year. So suddenly the Eurozone hits their inflation objective, but the economy is continuing to crater.
Right.
So this is my big problem now. Yesterday, stock market off hard. Everybody wants to say it was Jay Powell, suddenly talking like a hawk. It was a hawkish cut. You know what? Baloney. We've talked about this now for quite some time. If the dollar index continues to meander on up, which it will, all's good. But when the dollar index suddenly makes surges on the higher side, all of the correlation trades must come off. It's a computer. It's not a person thinking, but the U.S. market is so good, I want to stay in stocks. The computer says, I have to buy back my dollar index, hence I must sell off the corresponding side of that equation, the correlation, and that means sell crypto and it means sell U.S. stocks. And when the dollar index moves suddenly, it forces a deluge of orders, which everybody misreads in the stock market as, that's it. We're reacting to Powell. If you want, I'll continue. Let's look at what Jay Powell said. And this is why I'm so convinced of, the upside targets. Jay Powell, while he ruled out today a December rate cut, he said, and this is where it's important to the viewers, read the lines. Tariff inflation is 0.6 to 0.5 on our present run rate. Now, if we take our present run rate of, say, 2.8, 2.9% inflation, and you take out 0.6, Powell said, this brings us very close to our target of 2%. Second point that Powell said, that was huge. We talked about this before it happened. Ending QT, he did, but he added a caveat. He said we're going to freeze QT at present levels, meaning that the government is the Federal Reserve is going to hold a certain amount of reserves, and they're freezing it right there. But that means, and one of the reporters asked the question, as debt rolls off and drops that number, no, they froze it. So that means the Fed will have to go into the market and buy short-term treasuries. Well, holy mackerel, that is adding liquidity.
Right? Absolutely. Uh-oh. Mr. Flanagan got too excited there. We just lost him on the feed there. I don't know. He usually comes right back in. We'll see what he has to say. I do agree with him on some things there. And would point out that the other part of that is that these earnings are justifying it, right? These year-over-year numbers that I pointed out on most of these. Even I was going to get into Hershey's next, who had a miss and it was down. Their revenue was up 6.5%, so not the 9 or 10% that I mentioned with a lot of the others. But what we are seeing is also that earnings do actually matter, and the earnings are getting us to where we need to be also. So you got shut off there, Mr. Flanagan. I just was mentioning that what I was going to come back and mention is that also, as I would point out to the deficit of our friend BigBeat, is that, he kept talking about this lowered bar, earnings don't matter. But what does matter is if you look at these year-over-year numbers, and again, it might be a K-shaped economy, but the NVIDIAs, the Apples, the Googles, these companies are just blowing away year-over-year numbers on revenue, on EPS, on growth. AWS up 20% on growth this year.
Absolutely. And I'll finish up the QT and jump into what you're saying.
Go right. Yeah, get right to the QT.
The QT ending, holding the freeze at the level. As things roll off, the Fed has got to put liquidity back into the market. We're still back into printing dollars. And that is another liquidity. That is another big positive. So while I don't know, the market took that one comment, of course.
Well, it's the December cut. It was the December cut. That was what mattered. Is they baked in 50 basis points, and when that came off, it spooked the market. And now that they're digesting, like you said, other parts of it and everything else, and then you get earnings reports that say, "Hey, guess what? We don't need to maybe lower rates because guess what? The big weights are going to carry this market again." I mean, Western Digital just said that hyperscalers have already locked in their orders through 2027. I don't know if you saw that.
Yeah.
I mean, that's how do you compete with that? I mean, again, so you can lay off your sales team for a year because there's nothing to sell. I mean, this is what we're talking about, and it isn't all roses, but that K shape really is the K shape. Now, where it all hits the fan, in my opinion, is how does that government react to that, and how do we redistribute that without being socialists? And that's going to be the hard part. I can see that laugh by, because it's going to be Washington where it all falls apart, because we're going to need that, because that's what's going to happen. There are going to be less of, there's going to be different. This K-shaped economy isn't going away. It is building, unfortunately.
The K-shaped economy will eventually begin to yield as all of this investment capital begins to build out. Let's just take a very simple analogy. As you begin to get more and more data centers, you've already got a shortage of electricians. So many of these young kids are in high school, are already going into these programs, skill programs, in HVAC and electrician, plumbing. These jobs are all out there. It's the younger generation. The older generation, this is a transition period, and we're going to have to address that. And I think the government will. I think in January, you're going to see some major initiatives come out. But let's talk about, this quantum convergence that I've talked about. It is technology driven. It is the Mag 7. It is the filtering the other companies that are involved, as you just said. There's so many of the smaller companies. So it is already beginning to show how it is trickling down into the economy and creating a ton of jobs. And at 4.2% unemployment, I really wouldn't worry about these announcements of a few thousand people being laid off. All right. This has gone on forever and ever. I mean, I've been in banking for 43 years, and, we saw this all the time. Hey, we're having record time, but we're cutting 2,000 people. What's that all about? That's a constant, I hate the terminology that's the corporate executives use, but they call it pruning the tree. And I can't stand that when they talk about it that way, because we're talking about human beings and people's livelihoods. But what we need, since our government is getting much more involved in the directional nature of a capitalist society, when we need them to offer a little bit of guidance on redirecting people that are losing jobs. Why not? We give out unemployment insurance. So the government is already there to help people when they lose a job, but why not take it to the next step, right? I think the Bible always had that famous line, you can teach a man to fish, but you can create
no, you can give him a fish, but if you teach him to fish,
that's it.
You got it backwards, but I'm with you there. I am with you. Yeah, no, absolutely. And again, that is the idea. And right, it's just retraining, redeciding the way jobs go. But it is we are at a cuspis of a different, like we had with the Industrial Revolution. It doesn't happen overnight, and it doesn't, and it isn't, the end for everybody. But it is such a seismic change that it does have hiccups that affect, different parts of the world.
And that's why I came up with that term quantum convergence, because we've just discussed the Fed, and I gave you two huge reasons of why to continue to be very positive. The Fed is transitioning and shifting into a situation of providing liquidity. But the second part was the China, Trump and Xi. Well, let's take Trump. Nobody, we've got so many people that are anti-Trump, for Trump. So let's cut Trump out of this equation and let's analyze it by what President Xi said. He said, 2 countries should forge a path built on partnership instead of adversity. That's a pretty good positive, right? That goes along with this unity idea of what technology is ushering in. Second, Xi stated, China's development goes hand in hand with the U.S. president's vision of make America great again. Oh, my goodness. I couldn't believe he said that. And then he urged the negotiating teams from both sides to complete the follow-up work as soon as possible, delivering tangible results that will provide peace of mind to China, United States, and the rest of the world. And lo and behold, Trump is heading over there in April, and Xi is going to make a trip to the United States. I mean, that was okay. I didn't see paper deals. I didn't see signatures. But what these two leaders of the top of the world have just stated is precisely the quantum convergence that I'm talking about, that technology will usher in much more unity in the world. And this is incredible for the business community, for the investors of the world.
I'm not in on that one yet. I mean, I agree. It would be if it happens. I really look at it. I am more on the other side of that one. This is a 1-year truce. And that's good. I'm taking that as a positive. It means for a year that hopefully we've got a year till we have to hear about it again. And we can work to make that happen, because again, I read into it, and the goal is to get down. If China does everything for us, we're going to get down to 47% tariffs. So that, I don't know that at the end of that makes it where we need to be. We'll see. It is positive movement, there, but I don't trust either leader personally. And as you've spoken about on many times, especially when it comes into the Chinese, they're great at announcements, not so great at follow through, right? That's out of your words a lot. So that's it. I'm just being pragmatic about it. For me, again, it's still a win, because for a year, hopefully we're out of the rare earth issue. We're out of the 100, 200, 300% tariff issue, and we're out of them cutting, not buying soybeans. So if we can be, you know what I mean? If that's our positive, like I said, I fall in between as the moderate. That's a good takeaway still for me. I'm not a sky, it's over the sky. These two are going kumbaya on fishing trips together yet. But and hey, listen, I hope it is the case. Again, we need to have more unity. That's the view of crypto, and that is that there are no world borders. It's more about globalization, and we need that because that's how you bring up Africa, and that's how you bring Latin America up to the developed world. So I'm with you. I just see it with different glasses.
Howard, you've always been a show me the money guy. You want to see the hard data, and I totally agree with you. You've got to see the follow-up in the numbers that prove out that it's happened. They're promising to buy 12.5 billion, 12.5, what was it, million tons of
soybeans.
Of soybeans by the end of the year. Okay, let's see if they make it.
Right.
If they do,
and that's the steps. If they do that, and like I said, I see it as a positive either way. For everything here, we got enough headaches. We don't need that headache, and we are getting things done with other countries that are very positive also there, in my opinion. So it just seems that, again, as a pragmatic person, the big three are still the problem, right? We don't have China done. We don't have Canada done. We don't have Mexico done. We're moving in the right direction with two of the three. But we're not there yet. And as you've also said for months, we need to see those three done, and we need to get something done here with Canada.
We need India, but I will just show you the proof is in the pudding. Absolutely. And why I can speak so positively. Guess who the number one importer to the United States is today? Well, wouldn't you be shocked to find the EU is now the number one importer to the United States? And wow, we have a trade deal signed and sealed with them. Yep. So people are going to start seeing that once these deals are done, the opening up of trade is enormous. And that's what's going to start pushing people to, all right, let's get this done.
Yeah, I hope so. Again, that's my view is that we're moving in the right direction into positivity. It does look like Besant and Lutnick and those boys are out on around the world making things happen. I do have faith in both of those people to do deals that are good for us. And they are, strong business minded people. Yep. And I like that. So it's there. What else? Are you looking for anything this weekend? I'm putting my head in the sand and hoping nothing goes. We have the quietest Halloween weekend we've ever seen. Can we just do that?
I'm hoping it's a quiet weekend. I've reduced a lot of my risk positions. I will put risk positions back on, SQQ and UVXY, some vol just as a weekend risk protection. But honestly, I believe next week, we're going to tear the cover off the ball, and I think you're going to see significantly higher levels yet again, and the earnings that are coming out are proving, showing that why not? There's just so many people. Once again, go into a dark room, throw a dart, you will hit a negative balloon. There is no way you can miss. Everything you hear out there on the bobblehead shows, on CNBC and Bloomberg. All they do is talk about, well, this is the highs, and you can't really be doing this because, you know what? Close your eyes, be selective on what you're investing in, of course, and be very prudent on your risk management. If you enter into something and it's not going your way, cut it. Don't hold it. Don't sit and go, well, I hope it's. No, forget that. You've got to act in a very disciplined manner in this type of market. Do you buy NVIDIA at the highs? Well, today's high, tomorrow's low. Sometimes that's the way I look at things, and I enter in with very small positions, and I build as I begin to gain confidence. So I'm not urging people to jump in. I'm not going with FOMO, but I just think that the ingredients that I've been talking about for so long are now percolating to the top. And that's how I see the macro world. And I'm watching very carefully now for India to move very rapidly here. And I think, if Canada pulls those ads, I think they were very close from what I understand to agreements. So we could see a very quick move there.
Awesome. Well, we are getting ready to end it up for the day. I will say, expect things to breathe. So when Steve's talking about, NVIDIA, Apple, Amazon today, as you can see, they are pulling back slightly. That's just breathe. Let the market breathe. Buy those. If you do like them, do not buy them as they break to a new all-time high usually. Let it breathe, and then you'll get your opportunity. You're seeing that across them already today. And as Steve also mentioned, short stop losses and have a take profit target. Don't just say I'm staying in forever. If you like NVIDIA to break to 225, then have your stop loss in place, maybe at 200, and your take profit in place at 225. That sounds like a solid risk reward to me. And that's, how you trade it. Is that what you're thinking, Mr. Flanagan?
Absolutely. I couldn't have offered better advice. I always would say, let's keep numbers simple. If I jump in at the high and buy 2, then I always put an offer for 1 slightly higher, just to confirm my, I'm taking the top. I don't want to be FOMO here and have it like boom crash. So I always will take 2 and then sell 1 shortly thereafter to lock in a profit. What does that do? It lowers my cost average on my original now position. So
I love that idea.
Got to be smart, and you got to be very selective in what you're going in. But, I have a very positive mindset looking into next week. Like you said, hope it's a quiet weekend.
I'm with you there. Thank you, everybody. Quasar Markets. BigBeat will be back on Monday, so we'll have all 3 of us here. I will referee between these 2 as they argue it out. It should be an interesting one, although I'm on Mr. Flanagan's side on the earnings reports without a doubt. So we're going to go after BigBeat on that, I think, on Monday, right? I mean, everything's hitting those numbers that he said they wouldn't. So let's see what he has to say now. I might not have a job on Monday if I'm not here, everybody. You know why. Have a great day and a great weekend, and be safe on Halloween, everybody.